In today's video, I'm going over everything you need to know about the CLOU ETF listed on the Nasdaq Stock Exchange. Hi everyone, and welcome to this series on exchange traded funds or ETF investing, where I look into specific ETFs and show everything you need to know about the product offering before buying shares of the fund. ETFs are personally my favorite way to passively invest, as it takes the stress and worry out of stock market investing, which can be very volatile with wild price swings holding individual stocks. We will go over the ETF fact sheet, including the management fee, the index the ETF tracks, dividend yield, payment frequency, and the fund's performance. I will also go over the top 10 holdings in the fund, as these typically make up the largest portion of the weightings and resulting performance of the ETF overall. It is always crucial to understand what you actually own in these ETFs before buying them. If there's any ETFs you are interested in and would like me to make a video on, write it down in the comment section below. CLOU is an ETF provided by Global X, who own and operate the fund. Global X are the ones who actually own the underlying shares in the individual companies. So when we buy shares in the ETF, we buy from Global X, who continually issue new shares in an open-end fund and not the individual companies inside the ETF. CLOU aims to track the performance of the Global Cloud Computing Index that provides exposure to leading companies in the global cloud computing industry. These companies are involved in the delivery of computing services, storage, networking, and software services over the internet. Stick around to the end of the video where we'll see how good the performance and returns of CLOU have been over time. Now, cloud computing has been one of the strongest growing segments of the technology sector, and given much of the world's digital data and software applications are still maintained outside the cloud, continued strong growth has been forecast. To be eligible for inclusion in CLOU's portfolio, a company's share of revenue from cloud computing services must meet a minimum threshold. CLOU's index is constructed so that it prioritizes companies that generate the majority of their revenues from cloud-based services. In one trade, we get diversified, cost-effective exposure to leading companies in the cloud computing industry. To find the ETF in your brokerage account, you'll need to type in the ticker code CLOU to bring up the options to buy or sell shares in the fund. It pays distributions, which are dividends from the ETF, 2 times a year, and has a management expense ratio, or MER, of a 0.68% per year. So for every $10,000 invested, it would cost $68 per year in fees. And this isn't a bill you have to pay immediately. It is automatically deducted from how much money you have invested in the ETF, so you never really notice anything being paid or taken out of your brokerage account. Now, since this ETF tracks companies that are heavily involved with cloud computing, there is no surprise that information technology companies make up the largest portion of the fund at 76%, followed by communication services at 11%, consumer discretionary at 8%, and real estate at 5%. Most of the companies in the ETF are based in the USA, taking up 85% of the fund. If you're enjoying this style of video, feel free to give it a like to let me know and subscribe for more. Now, when purchasing shares in an ETF, I like to have a basic understanding of the top 10 holdings, as these companies will have most of my money allocated to them, and they will end up driving the bulk of the fund's performance. So we'll quickly go over which companies are in the ETF's top holdings and what they do to make money. Shopify is a Canadian multinational e-commerce company headquartered in Ottawa, Ontario. It is also the name of its proprietary e-commerce platform for online stores and retail point-of-sale systems. Shopify offers online retailers a suite of services including payments, marketing, shipping, and customer engagement tools. Shopify makes money via its subscription-based offering for online stores, along with merchant solutions including payments processing transactions, shipping, referral fees, and point-of-sales hardware. Twilio is an American cloud communications platform as a service company based in California. Twilio allows software developers to make and receive phone calls, send and receive text messages using its web service. The company makes money by charging its clients a per-minute rate for calls, per text message, and a monthly rate for Twilio phone numbers. Twilio will automatically draw down their client's account balance as they use it. Netflix is an American entertainment and production company headquartered in California. Netflix was founded in 1997 by Reed Hastings and Mark Randolph in Scotts Valley, California. The company's primary business and way of making money is a subscription-based streaming service, offering online streaming from a library of films and television series, including those produced in-house. Dropbox is an American file hosting service company based in California. It offers cloud storage, file synchronization, personal cloud, and client software. Dropbox makes money by using a freemium business model, where users are offered a free account with a set storage size, with paid subscriptions available that offer more capacity and additional features. Accordingly, Dropbox's revenue is a product of how many users they convert to their paid services. Proofpoint is a cybersecurity company based in California that provides software aimed to protect workers and data from advanced cybersecurity criminals that target email, social media, and mobile devices. Proofpoint's email protection is a cloud-based solution that allows companies to easily filter their inbox and outbox. Proofpoint makes money by selling this software to businesses to identify and protect users from malware and threats both known and unknown. Zscaler is an American cloud-based information security company headquartered in California. The company has more than 100 data centers with customers in 185 countries. A majority of the customers are located in the United States, with most customers having greater than 10,000 employees. Two of the products produced by the company are Zscaler Private Access, which provides secure access to locally hosted applications, and Zscaler Internet Access, which provides secure access to external applications. Zscaler makes money by selling their service as a subscription for recurring revenue. Workday is an American company based in California and provides enterprise cloud applications for finance and human resources. The company delivers financial management, human capital management, and analytic applications designed for various companies, educational institutions, and government agencies. As part of its cloud services, the company provides embedded analytics that capture the context and content of everyday business events, facilitating informed decision-making from wherever users are working. Workday makes money by selling subscriptions to its services, rather than selling the software outright. Expenses are booked up front when it signs on a new customer, but the associated revenue is recognised over the life of multi-year agreements. Xero is a New Zealand domiciled public technology company listed on the Australian Stock Exchange. Xero is a cloud-based accounting software platform for small and medium-sized businesses. Xero's products are based on the software as a service or SaaS model and makes money by selling subscriptions based on the type and number of company entities managed by the subscriber. Its products are used in over 180 countries around the world. Paycom is an American online payroll and human resource technology provider based in Oklahoma. Paycom is a cloud-based payroll management solution that enables organizations to automate payroll processes. The platform stores all employee-related data in one place and ensures that changes are reflected in real time across the system. Paycom makes money by selling this service as a subscription. Akamai Technologies is a global content delivery network, cybersecurity, and cloud service company providing internet security services. Akamai's Intelligent Edge platform is one of the world's largest distributed computing platforms. The company operates a network of servers around the world and rents out capacity on those servers to customers who want their websites to work faster by distributing content from their locations near the user. It makes money by selling increased bandwidth through their networks to businesses that use cloud computing such as streaming services. Since inception, CLOU has had an average annualized return of 44% and a cumulative return of 86%, which goes to show the power of compound interest, keeping the money invested growing faster over longer periods of time. Now, of course, past performance is no guarantee of future performance, but it's always a good sign of consistently improving business fundamentals, continually driving each individual stock higher within the ETF. I prefer to look at the cumulative returns as it includes the dividends paid to shareholders, which should always be included as we're getting some value back, plus with the dividends reinvested, this is what provides the compounding effect, exponentially increasing our returns the longer we have our money invested in the fund. This is the sort of approach I take investing for the very long term using ETFs, and one day live off the investment portfolio as passive income through either dividends or selling down small parts of the position, but maintaining the bulk of the capital. If you want to see how these companies make money in detail, watch the playlist shown in the end screen. Let me know in the comments what you think of this ETF and whether you currently own any shares or plan to buy. If you enjoyed the video, leave a like and subscribe to the channel for more investing and Tesla videos. Thank you for watching, and I'll see you in the next one.